And this event is designed specifically for the members of the AgriPDB platform, and we truly appreciate your participation. And we also encourage you to engage actively and share your thoughts during the discussion. So without further to say, I would like now to hand it over to Carolina Trivelli, who will help us to guide today's conversation. But before, we will start the session with the first guide question. That is a Menti question. So I will ask now Jessica or Edgar to share your screen so our participants can see the question.
Hi, Alejandro. Can you quickly grant me access to share? In the meantime, I'll put a link in the chat where you can access the Menti poll and to answer the first question.
You might have access now, Jessica.
Great, thank you. So I just put the link in the chat where you can answer the question. And let me share my screen. It seems I'm having a problem, Alejandro. Let me send you the link.
Okay. Is the same link for me as well?
Yes, yes.
Can you try, Jessica, again to share your screen?
Sure, let me see. It seems like I'm still having an issue. I'd suggest maybe we can go ahead with the presentation from Carolina. And in the meantime, people can answer the first question on the Menti, and we could show the results after.
Okay. Okay, sure. So, Carolina, please.
Thank you, Alejandro. Thank you all for attending this webinar. The idea is to have an open discussion on why adding insurance to the portfolios of agricultural PDBs can be a good strategy to improve the financial inclusion outcomes that every PDB should be helping to support. Because as we discussed in the previous webinar, PDBs are in a distinguished position to really promote and engage with rural financial inclusion, and through that improve the quality and the size and the scale of their own operations. So now we are moving to adding the discussion on why insurance services could be a good addition and a good strategy to really enhance the rural financial inclusion strategies held by agricultural public development banks. So I will share my screen now, and let me know if you see my screen now.
Yes, we can see.
Okay, I will put it in presentation mode if I could. Okay, so the idea is to open the discussion, to frame our discussion in why should agricultural development banks include insurance in their product portfolio if they are willing to promote rural financial inclusion. So we have three main sections in the presentation, but I would like to begin with a general consideration. There are at least three main ways in which adding insurance to the products and service portfolio of the agricultural public development banks could really support rural financial inclusion. First, and that's the main objective of insurance, is to generate and to help PDBs to have and to work with less riskier clients. When you have an insurance, you protect not only the household's incomes and assets, but also you increase the resilience, the financial resilience of your clients. So then it's a good practice to really have better protected clients. The second way is that when we do work with insurance, with agricultural insurance and with climate smart insurance products, we tend to obtain and to get more productive clients. When clients are protected and really know and are confident that they are really protected with insurance, they tend to invest more and to increase their productivity. So then their agricultural results in terms of production, income, and opportunities increases, and then that increases their repayment capacity, their interest in having more credit, and to work more with the financial sector. And from the side of the financial providers, when you offer credit products that are tied to insurance products, then the financial sustainability of the provider improves. You get better risk profiles and you access better conditions, credit lines, and you also increase your outcomes in terms of inclusivity because you're able to reach clients that without an insurance were not attractive for the financial institution. So there's a bunch of evidence in the literature and in the practice of financial sector providers that show that when you offer insurance, you get impacts, positive impacts in the farmer welfare and in the opportunities to invest in the agricultural sector. And there's abundant literature for this, so I'll just go through the titles because I don't want to spend too much time in this. We know when we have insured farmers, they tend to increase their investment, then they tend to obtain more and better, more stable incomes, more predictable incomes. They also have positive impacts in their well-being because providing insurance also tends to have a positive effect in food safety, in the adoption of climate-smart policies, and improving gender equity among the farmers. But also, there's a bunch of sound evidence on the positive impact on development banks. More, as we discussed previously, greater financial stability, better operational capacity and risk reduction, and including new clients to the credit portfolio without risking that portfolio, and improving some, creating some strategic advantage for agricultural development banks to obtain, to improve their achievement of their mandates and to strengthen their capacity and policy objectives, and for sure, obtaining better credit lines in the global markets. So there are several documented good experiences around the world. We are going to discuss today a couple of them, but the idea is that this is not something new. This is not something that anybody knows. On the contrary, there's significant experience, but the scale of this experience is still a challenge. So we need to keep moving and keep adding and keep discussing why agricultural insurance could improve the results of agricultural public development banks, but also how this is key to increase rural financial inclusion in the global sphere. So just to close, the main message is why we should include insurance in our set of products. And the simple answer is because it brings really benefits to the clients and amplifies the impact of the agricultural public development banks. So integrating agricultural insurance has a positive impact on financial stability and on the economic opportunities of the agricultural producers, also in their well-being. So this is a win-win situation that we should take advantage on to keep improving the opportunities for farmers, to engage with highly competitive products and services with the financial sector to improve their livelihoods and well-being. At the end, that is the objective of every single agricultural public development bank, to really bring development opportunities for the agricultural sector in their own countries. So we know that banks that work with insurance as part of their portfolio improve their financial performance and their long-term sustainability through their improved operational performance, through their greater inclusion and contribution to development, and because they enhance their capacity to attract external financing and to work with other public sector objectives. So having said that, that's to set the stage on this webinar, which is a collaboration between UNDP and IFAD. So I'm glad to be here, and we'll be happy to answer any questions after the case presentations we will have. So thank you, and I'll stop sharing my screen.
Thank you, Carolina. So I think we can jump to the second question. Jessica, do you want to try again to share your screen? There you go. Okay. We also have some answers from the first question, which is how does your institution currently manage risk and climate? And this is this agrees also with a research that AgriPDB did, where we saw that apparently less than 10% of the banks are including insurance in as a risk strategy. So the second question now is which of these benefits of agri insurance is most important for you? And what you have to do is to rank in order the priorities. So we are going to give 2-3 minutes for the banks and for the participants to answer.
On the same link?
Yes. Okay, so as we see, is financial inclusion and credit portfolio stability the first option, followed by improved operational capacity and risk reduction. So now we are going to the next panelist, which is from Land Bank, Mr. Andries. We are going to share the screen, and you let us know whenever you are ready. Mr. Andries is the Executive Manager Operation of Land Bank Insurance Company in South Africa, with more than 20 years of experience in the sector. So, Mr. Andries, the floor is yours.
Thank you very much, Alejandro, and thank you for the invitation and the opportunity for us to share our experiences as the Land Bank Insurance Company based in South Africa. You can go to the table of contents, maybe change it into presentation mode. Because of time, I will not have much time to go deeper into details, but I'll give a highlight of the Land Bank and the Land Bank Insurance Company, which I'm part of, and a brief overview of crop insurance globally and in Africa, and also what do we do as the Land Bank to promote agricultural insurance. Next slide, please. The Land Bank is the wholly owned government bank owned by the government of South Africa. It was established more than 100 years ago with the main purpose, I think in 1918 through the 1913 Land Act, with the main purpose of acquiring farms and resettling white farmers at the time, in terms of farm purchase, farm infrastructure, and production inputs for farmers. That's when the bank was originally formed. And obviously, with the democratization of the country post 1994, it had to change its mandate to accommodate all farmers, commercial and smallholder farmers. So there are three pillars of the bank currently, being corporate banking and structured investments on the one hand, and also commercial development and business banking, where they provide loans to farmers, commercial and smallholder farmers, and other agri-enterprises. Okay. And then the third leg is the insurance solutions, where I am. The Land Bank Insurance Company is the wholly owned subsidiary of the Land Bank. And the Land Bank Insurance Company initially started as a life company, but transitioned into a composite company for both life and non-life, and has been in existence for 70 years. And if we look at the bank itself, I've just given a few snippets of the funding loan book in 2013 and currently, where it is currently for this current year. The loan book is currently standing at 15 billion rand, and obviously the year is still growing. Now, as I've already mentioned, the insurance company is composite, both life and non-life, and our mandate is not only to support the bank, but also to assist in the development of the agricultural sector by providing insurance products, both on the life side and the non-life side, okay, to support the loans that the farmers are getting, and also to support climate risk that the farmers that are getting. Okay. Now, the South African market, just high level, is currently 2.6 billion rand, roughly $150 million in premium terms, of which currently the Land Bank is the second biggest with a market share of 33%. The next slide, please. Now, if we look at what the global, I'm talking crop insurance, but that does not mean livestock insurance is not important. But livestock insurance is a very small component of our business in Africa and in South Africa as well. So according to Allianz Re, their estimates for crop insurance, which is indemnity insurance, is $41.7 billion. But now if I project Africa, it's tiny, less than 1% of that. And the countries colored in blue, that's where we have indemnity insurance, with the dominant market being South Africa, where we have a larger concentration of commercial farmers. And of course, the other countries are Zimbabwe, Namibia, Kenya, Morocco, as well as Nigeria. Predominantly indemnity, but it's tiny as compared to the global contribution. If you go to the next. Now, if we look at index insurance according to Allianz Re statistics or estimates, globally it's about $5.6 billion. Again, Africa is tiny as compared to the rest of the world. And we know why. The main reason is that in other parts of the world, there is more government involvement in subsidies, better understanding of insurance literacy, and so on. But if you look at my country, South Africa, in the south, it's zero, because up to now, the government of South Africa had not allowed parametric insurance or index insurance. It's only now that they are beginning to look at this type of products, particularly for smallholder farmers, and are beginning to approve those on a pilot basis. I'll come to that later. Then the next slide, please. Now, if we look at the overall landscape in South Africa, currently there are 5 insurers that are dedicated to agricultural or crop insurance, of which 4 are fully private owned and 1 is state owned, is ourselves, as we are a government organization. So predominantly, the market is indemnity, as I have said, because of limited support up to now on index insurance. I think we are lagging behind most of the African countries. Like Carolina has shown, ACRE African, East Africa, the DRIVE program, what Zambia is doing on farmer input support program, and other countries. So South Africa has lagged behind when it comes to index products. Okay. Government is not subsidizing crop insurance, among others, and our regulators have up to now not allowed this type of products into the market. We're still predominantly an indemnity market, agricultural market. The number of commercial farmers, currently the estimate for commercial farmers is roughly between 35 and 40,000, of which 1/3 are buying insurance. Okay. Why 1/3? Access is difficult for smallholder farmers and equally difficult for commercial farmers because of price, lack of subsidies, and other issues. Because if you add premium to a farmer's production inputs, it increases the production cost. And without subsidies, it makes that exceedingly difficult. But even more difficult for your smallholder farmers. Okay. The current estimate, I've not put it in the slide, for smallholder farmers between 250 and 500,000. And you may ask why I'm estimating. We all know the statistics we get normally are not reliable. So I'm using an estimate. And of which in the current setup, smallholder farmers that are buying insurance is less than 1%. It is tiny. So the scope for growth and support to this sector is still big. And of course, the challenges we have here in South Africa is that weather risks are huge. I mean, variability and occurrence of events, flooding. We are a drought-prone country. And obviously, what it means that every other year we have drought, which affects farmers, and more so smallholder farmers. We had fires recently and flooding in the Eastern Cape, although it affects property, but it's also got a big impact on farmers, particularly smallholder farmers, on infrastructure and also on production. So the coping mechanism of smallholder farmers are much difficult and harder without government support. Hence, our farmers still rely on government for post-disaster relief, which normally comes many months after an event has happened. Typical problems that we have across the board. So from an insurance perspective, we still need to develop more appropriate products suitable for smallholder farmers. And as insurers, we've been geared towards commercial sector, but we also need to build the infrastructure and use the technology to support smallholder farmers. The next slide, please. Now, what are we doing as the land bank? As I've indicated that we are largely an indemnity insurer, but we also got approval from the regulator 2 years ago. And the IFC and Celsius Pro is supporting us greatly in the development of index products. We've got an area yield index product and pasture index products that we are piloting for smallholder farmers, which financiers also find it attractive. But of course, in terms of structuring these products, there is much more work in terms of organizing the farmers, making sure that you bundle your products with credit and so on. So we are providing, we did a pilot project on pasture index, and also are going to do a pilot for area yield index for the coming season. We already started with the support of the IFC and Celsius Pro last year on the pasture index, but we all know the season was not dry last year. So take up was not huge on the smallholder farmers. And also the policies we issued did not trigger because it was a relatively dry year. So we think we will have more farmers participating in the pilot in the coming summer, and we're estimating 2,500. So in addition to these products, we also offer credit life. I'm not leaving it behind, to support the bank and non-bank clients on the loans that they get. But the issue here is that the farmers have got a choice whether they can choose our products coming from the bank, or they can choose products from another insurer. I think legislation say we need to give the farmers a choice. So in presenting our products, the farmer must be satisfied that our products are the ones that would meet their needs. But what we find is that the big commercial farmers would prefer your other established insurers than us. So what we have are smaller loans that we support in our portfolio. Okay. So because farmers are not forced to come to us, they need to be given a choice. But we find this being a very good instrument to protect the loans that the farmers get, either through death or disability, because the other non-life products would protect crop failure or when animals die. But if a smallholder farmer or a commercial farmer dies, the loan needs to be protected. So we offer these two products. Now the next slide, please. Now, our approach, a key focus, one of the questions that I was asked was, how do we make sure that we get this pipeline coming from banks? Even our own bank has got this big loan book. It cannot just come to us if we don't offer suitable products. So we need to open that channel. The relationship between bankers and ourselves. The bankers need to understand the products that we are selling, and also that the products that we have on our site are properly tailored and suitable for the clients in the loan book. We have to understand the client's loan book. Okay? And then we've got to present the products to the farmers. It's got to be a seamless end-to-end channel for us and the bank, our own bank, and also our other agricultural banks, okay? Because we operate in a competitive market. And importantly, training of bankers on insurance, it's very important because bankers are looking at approving the loans and so on. So we need to make sure that they understand that the loan they are approving on the other side, they can get support from the bank. So that linkage with the bankers and relationship and that channel is very important. But not only that, also reinforcing the product knowledge. I've already mentioned that they need to understand the product, but critically also issues of training and capacity building and awareness for farmers, particularly smallholder farmers. Do farmers understand the policy wordings that we have, which is a big challenge? So we need to do more than just selling insurance, but training, creating awareness, financial training, particularly for smallholder farmers, okay, which is very important. And build technical capacity on the farmer side and even on our own side in terms of what should we do to use technology for loss assessment if we are to provide index insurance. What partners can we get on board? Like I've mentioned, IFC and Celsius Pro and other partners that will help us roll out this type of project. But importantly also, to continue with the engagement with government and other players to promote public-private sector partnerships, because we cannot do that alone without getting the support of key players, government and other players in the market. Then my last slide is more a conclusion, which talks to some of the points that Carolina mentioned, the importance of insurance in risk mitigation. Yes, it's important. It can be used as collateral security for loans for those farmers that get production loans to farmers. We need to embed insurance into what the farmers do, because if you look at the African landscape, take-up of smallholder insurance is backed by donor funding, World Bank, Thrive in East Africa. How do we make that sustainable beyond Thrive, beyond the financial support? So these are some of the topics going forward to make it. How do we embed insurance and make it sustainable in the long run? And also promoting public-private partnership. Thank you very much, Alejandro.
Thank you very much, Andries. Now we are going to jump to the next panelist from African Risk Capacity. We have Ms. Zeynab CISSE. She's a business development lead from West and Central Africa. She's an expert in agricultural risk management and climate insurance solution, and she works closely with governments, banks, NGOs, agricultural tech firms, farmers organizations to develop and implement parametric insurance. So we will share the screen and Zeynab, please let us know if you can see the screen.
I can see.
Yeah, the floor is yours.
Thank you, Alejandro. Thank you, everyone. Today I'm pleased to share African Risk Capacity Limited experience and contribution to agricultural insurance, and discuss on how such instrument can support inclusive rural finance. You can go in the next slide, please. Yes, thank you. So the ARC group is a two-part entity under the African Union. We have at first the ARC agency established in 2012 to help African Union member government to prepare for and respond to extreme weather and epidemics through contingency planning, capacity building, and early warning tools. And we have the African Risk Capacity Limited, that is the founded in 2014 as an hybrid mutual insurer offering Pan-African risk pooling and parametric insurance product to cover government and also NGOs and producer organization, bank, and so on. So since 2014, ARC Limited has been a leader providing parametric insurance solution to African government. And we currently have 39 member states with 33 countries participating, having participated through 284 policies issued. Our mission is to help African states better prepare for climate shock through risk transfer solution. Next slide, please. You can go to the other one. The other one. Thank you. Like I said, our approach allows us for payout to be made within 10 days of a catastrophic event, compared to traditional aid that may take up to 18 months. This ensures government can quickly preventing food insecurity and protecting vulnerable communities before crises escalate. And like you can see, we have a rating of I-. We are the best insurance company covering now government and other partner against climate shock. Next slide, please. Beyond financing, ARC strengthen coordination among government and humanitarian partners like WFP, for instance. Parametric solution provide predictable funding, which enhances planning and facilitates a coordinated response, avoiding overlap and inefficiencies. ARC emphasize transparency and measurable impact. Payouts are linked to pre-agreed contingency plan, ensuring funds are used efficiently. This model builds trust among stakeholders and reinforces accountability toward affect communities and donors. Next slide, please. Like everyone knows, our first business model was sovereign insurance. Everyone know asks for sovereign model insurance, but since 2020, we are in a phase of strategic growth and work together with stakeholders in target countries to develop a non-sovereign business to cover smallholder farm via program with NGO like WFP, with banks, with some also farmers group, and now we are expanding our solution to them via micro and meso insurance solution with our other business line also, that is the humanitarian solution, where we are helping government also, but also NGOs to cover their beneficiaries. Next slide, please. What is our offer related to parametric solution? With parametric insurance, our product pays out based on an objective triggers. For example, we have drought products, tropical cyclone. We have also some outbreaks and epidemics product. This enables quick disbursement and reduces administrative costs, making it particularly suitable for rural and agricultural contexts. Next slide, please. Now I'm going to present quickly one of an innovative approach we have in this region. We prepare 2 study case, but due to the time, I think I will just present the PACAN one and we'll share the presentation with all the participants so you can know exactly what we are doing, the other study case we wanted to share with you. So for the PACAN, beyond the traditional model, the PACAN program launched by BOAD. BOAD is the Western Bank of Africa, with the support of KfW, Munich Re, and the Frankfurt School. The program integrates parametric insurance directly into loan structure. This is an innovative way to link credit and insurance to enhance resilience. A lot of the bank, like public or private bank, now are working to develop innovative solution, to cover their portfolio and by extension their client against a climate risk, because they had a lot of costs due to that. So with PACAN, the BOAD decided, to take the product with the support of their partner to cover some of some of the project they have in their portfolio that has as component adaptation, climate, finance mitigation, and so on. and we launched the project with them last year. So in their portfolio, they have, you know, a project to cover countries, but in the project they have to cover countries, they have also some line of credit they are giving to some bank in those target countries. Next slide, please. So the Bakan programs is a subsidized loan to support adaptation, investment, and cover debt servicing via parametric insurance when severe weather and health events occur. This helps to reduce the risk for both lenders and borrowers, improving access to credit. Like you can see in the structure, it is, you know, KfW that is supporting BOAD by giving, you know, a grant to cover their portfolio, and by extension, the countries and the program they have in those countries. So we start the pilot last year with 4 countries. You can go to the next slide, please, for 4 countries. And this is an annual coverage that help to cover new loans, down, and repayment, and with a flexible coverage. You know, the renewal must take place outside the risk season. Next slide, please. The program has been launched last year with the participation of 4 countries, Benin, Togo, Senegal, and Côte d'Ivoire. You can see the structure, you know, and the Bakan loan portfolio when you have, you know, the percentage that was taken by each countries. And we started with a loan portfolio totaling 402 million euro, and the maximum loan portfolio repayment over the period was 23 million 800 euro. This year we start the renewal of the project with the 4 countries that start the pilot, but we were in the process to onboard 4 new countries: Mali, Burkina Faso, Guinea-Bissau, and Niger, that will allow us to have all WMU countries coverage. Next slide, please.
Please, 1 more minute, Zeynab.
Yes, and this is the last slide. This slide shows the total amount that we paid. The product triggered in Togo last year, and we paid around 6 million euro to the countries that help them to cancel 2 annuity, and the amount was 6 million. So this was just to explain quickly that sometimes it is very interesting when you have public bank like that are giving, you know, a line of credit to the bank or other MFI to help them, you know, covering the smallholder farmer they have in their portfolio. And we are having a lot of program, like I said, like that in the region. This year, for instance, we are starting a pilot in Côte d'Ivoire where we have the IFC that is giving a line of credit to a local bank, and we will cover around 50,000 beneficiaries in the pilot phase in Côte d'Ivoire this year. Thank you, Alejandro.
Thank you, Zeynab. Now we are gonna give the floor to Tara James, which will provide IFAD point of view. Tara is agricultural insurance expert who is in charge also to the insured program by PARM inside IFAD. Tara, over to you.
Thank you, Alejandro, and good morning, everyone. It's a pleasure to wrap up today's presentations. Thank you also to my fellow panelists. Today, I'm going to be sharing the lessons that we've learned through IFAD's Insured program. Next slide, please. So I want to start by reminding ourselves of why. So why does climate risk insurance matter for inclusive finance, and why now? We've heard a lot today about the need to better serve our rural communities, especially the small-scale producers who are exposed to increasing climate risks. And these risks, such as the droughts, floods, shifting seasons, tend to undermine rural livelihoods, and it can stall investments that are really needed in food security and economic development. Everyone here recognizes that when this risk is unmanaged, the cost is paid not just by the farmers, but also by the lenders, the governments, and the food systems more broadly. However, insurance is one tool that can help to reduce that volatility, and not as a standalone product, but as part of a layered strategy for resilience. And this is where I think that public development banks have a role and actually can lead on this agenda. So with that context in mind, how is IFAD responding? This would be through the Insured program, which if you can move to the next slide, please. We've been working with partners to turn insurance or to integrate insurance into IFAD's portfolio of loans and grants, not just for protection, but also as a tool for building resilience among producers globally. So through the Insured program, Insured is a technical assistance program that has worked with more than 28 IFAD projects across 15 countries in the Asia Pacific region, in Africa and Latin America. And we support insurance solutions tailored for rural realities. We provide policy advice and support technical assessments, capacity building, product development, and implementation technical assistance. Beginning in 2018, the program has so far supported more than 630,000 rural people. We facilitated approximately close to $3 million in payouts, and we've trained over 23,000 people in how to use insurance and improve financial literacy. Notably, more than 50% of those covered were women. And these aren't just numbers. They represent greater stability and in many cases, an ability to bounce back after a shock that may have been devastating otherwise and cause people to fall deeper into poverty. Currently, the Insured program is in its second phase of implementation, which began in 2025. And during this phase, we're focusing on continuing to provide demand-driven technical support, scaling up inclusive insurance programs, and also on more global advocacy and knowledge sharing. Next slide, please. So here I want to give an example of what we do in action. And this example is where we embedded insurance into a broader rural development project in Kenya. So in this model, we provided technical assistance through IFAD's KSEP CRAL program, and crop insurance was bundled with digital wallets, which enabled access to banking, to subsidized inputs, and to training. And this was delivered in partnership with both government and private actors. And because insurance was part of a broader financial solution, we were able to reach more than 100,000 farmers and this is kind of an example of how demand is linked when you have other products and services that the producers are demanding. So in this way, insurance is able to protect the investments that they're making. They're able to get an understanding of how the product works in a way that isn't separate from the activities that they already are doing and that they know and understand. And this model worked because it captured some key features of inclusive insurance. So on the next slide, I think you can change slides. This is just a quick kind of checklist that outlines the main principles that are needed to make inclusive insurance work. So firstly, having products that are co-designed with the farmers. And in Kenya, this meant that the product was modified based on farmer feedback over the period of implementation. So this meant including more crop varieties in the product offer and sometimes adapting the trigger points to meet the realities on the ground. The insurance was bundled with credit and inputs and advice. And I mean, not every product needs to be bundled with all three or multiple services, but it does need to be products or services that are needed and demanded by the target group. The insurance was delivered through trusted local actors. So we worked with 2 banks in the country, as well as with the equivalent of extension officers who supported some of the awareness raising and education. So this helped also to build trust. The product was gender responsive. And it also was supported by some level of premium financing, especially in the initial stages when the product was unfamiliar and there was a low willingness and in some cases ability to pay for the insurance product. One other thing that we tested in this program was mandatory versus voluntary insurance. And what we found surprising was that, especially among farmers that received payouts, there was actually preference for when the product was mandatory for their participation in the broader program. So that's something to consider as you develop your own solutions. If you can move to the next slide, please. So what we saw is that certain design choices can shift insurance from just being some other product that is offered to being a pathway to actually have greater resilience, ability to bounce back from shocks. But to be transparent, getting it right is not easy. And what we've learned from on this slide, sorry, I want to show a bit of what we've learned. So some of the lessons and the challenges that we faced around demand, supply, and the enabling environment. So from the demand side, I think we all might be aware that affordability is a big challenge, especially because of the severity of the risk. Farmer trust and education is also a barrier. From the supply side, there is a need for innovation. Good data is always needed, and in some markets, especially, there can be incomplete or no data at all. And the sustainability of business models can be a challenge. Regarding the enabling environments, one of the main challenges is that regulations are sometimes lagging behind what is needed for these solutions targeted to this particular for inclusive insurance. And this is because for these target groups, the products are not necessarily the traditional products that are already regulated by the system. They need to be adapted to reach remote communities. So you might have to have different types of distribution channels allowed to sell the products. Or you might have different types of products altogether, like index-based insurance, which I believe was mentioned by other presenters. So these challenges mean that sometimes insurance is not the best solution or the most appropriate in a moment. However, IFAD has been playing a strategic role in trying to address some of these challenges through its projects and programs, and also by bundling the insurance with products and services. But we can't do it alone. And that brings us to the public development banks and how you can also contribute to making inclusive insurance work for the ultimate beneficiaries. Next slide, please. So I just want to mention some key actions that you can consider if you are going to try to integrate insurance into your offerings, or to encourage the partners that you work with to do so as well. So firstly, there's a need for long-term investment and ownership, not just funding, but also just a sustained commitment. These solutions typically take several years to become embedded and to reach levels of scale. So it takes some level of commitment. It's important that there are institutional champions, so people that can drive the vision internally and to be focused and help to navigate some of the challenges that we mentioned earlier. Having strategic partnerships to blend not only the expertise and to help to reach scale, the partners that can support bundlings, partners that can support outreach are very important. Demand-driven design, I mentioned that before, but really putting the producers at the center of what we're doing as opposed to a top-down approach, and offering targeted technical assistance to strengthen the implementation. These shifts can help to unlock real benefits, de-risk lending, improved repayment, and more resilient borrowers, and better outreach overall to the most climate-exposed communities. So as public development banks, you have the mandate, you have the reach, and the relationships to drive this forward. So next slide, please. I'll close with a simple invitation to explore some of the tools that we've developed within IFAD via our insurance toolkit. There are some knowledge briefs that outline some of the common challenges and solutions for developing climate risk insurance. There are also some model terms of reference for hiring service providers to develop and design insurance products, to conduct feasibility studies, etc. And I also invite you to reach out if there's an interest in getting more information, or to collaborate with us as the insured program within IFAD. So I think that I'm probably over time now. So thank you for your attention, and happy to answer any questions during the Q&A.
Thank you. Thank you very much, Tara. So now we are jumping to a Q&A session. For this, we are going to ask the last question to the public. So I'm going to give the floor to Edgar Aguilar. We would like to understand what support would you need from UNDP and from IFAD throughout the AgriPDB. And after that, if you have any question, comments, please, the floor is yours. Now, Edgar.
Thanks, Alejandro, and good morning, good afternoon, everyone. So I think now the panelists have been trying to make the case on how insurance it's an, let's say, instrumental tool that will benefit the greater impact in your clients, beneficiaries, but then also can protect and support your business model. So while we wait for the results of this question, I think it's important that you as PDBs, you have a very, I mean, you as an institution are a policy instrument in itself. And I think because of that mandate that you have, you are targeting a specific target groups in the respective countries where you operate. So if we mention that as a PDB, you are a policy instrument, you are then channeling public investments, public financing into end clients. And I would say, just to address some of the challenges that were already mentioned and shared by the other panelists, like the cost of insurance, it's one of those barriers. I would say when making the case to your respective Ministry of Finance, Ministry of Agriculture, or even central banks, you can open the case that as they are channeling the public investments through the PDB to reach out to farmers, they may consider factoring these risk elements where they can, let's say, allocate some specific budget line to bundle that with the credit portfolio of the bank. So I think that's maybe you are in a well position or a really good position to open a discussion with the government as you are, let's say, that financial institution that is then channeling those public investments. So that's a kind of a way also we can support you from UNDP and IFADs to open a discussion with a broader government and different ministries, institutions on how to take this opportunity. So in terms of now what I see, the results in the chats, I think, yeah, like the first one is maybe if we now with this presentation, we're giving you the evidence, the reasons and the rationale why to include and integrate insurance. Then the second question, it's of course around how to connect with insurance providers. I would say the case of South Africa Land Bank, it's a very unique case because the own PDB owns its insurance company, so maybe discussions internally can happen, which is not the case for all of you. So I see that type of connections helping you connect with insurance providers at the different levels. And I think here we have the case of ARC LTD can be also something we can do. Second, I think this piloting a product, it's very important because we need to generate that evidence that will help us then make the case to sustain this in the long run. So I think this is then connected to this research agenda, because if you are then piloting or like trying this for the first time, you need then also the right monitoring and evaluation tools that will help you generate the evidence to make the case to not only fund this as a pilot, but make it something more institutional and sustainable. I don't know if there is any other question, Alejandro, but yes or yes. So I would say like we open actually this opportunity to express that we would like to collaborate with you. So you may need to reach out to us. And I think as we wait for the results, as I think IFAD, the Agri-PDB platform, I think mentioned it at the opening remarks, maybe less than 10% of the members use insurance now as an instrument within the other services and let's say risk mitigation tools that you use. There is then big opportunities to strengthen your capacities on how to connect and how to do this. So I think this is an invitation to reach out to us and to support you with this type of technical assistance, as Tara mentioned, but also from the UNDP side, we're also very open to support you on that. So I would say provide appropriate technical assistance. It's one. More knowledge materials. I think Tara shared the insurance toolkits. I will also ask maybe Jess if you can drop in the chat the different materials and tools that also from the UNDP side we're developing, and please feel open to reach out to us. And I think this is maybe one opportunity, one session. We are also open to explore more technical or specific sessions that can go more into the specifics on how to do this. I see also that the policy dialogue, it's something very important, especially for you as PDBs. As I mentioned, you may be depend or connected to a Ministry of Finance or Agriculture. So bringing and elevating this topic on insurance at a higher level of the agenda can be something that we can do from the UNDP and IFAD side. On the product design, that's also something important. Funding innovations, I think that's also required. TA. So I think as a follow-up, we will share our details, and we are very much pleased to continue the discussion with you. So I think if anyone has a specific point to ask, raise your hands. I think, Alejandro, we're also closing very soon, but that's what we can say for now. Thanks.
Thank you, Edgar. Thank you very much. So there is
Yes.
nothing else to say. Yes, Thierry?
If any question, please do not hesitate to raise your hand. We noticed that we have a very great participation from Africa this morning, with a representative from PDBs from Botswana, Angola, Ethiopia, South Africa, Uganda, Malawi, Lesotho, Mozambique. I might forgot some, but also from Azerbaijan, Dr. Passoum from Africa, Fiji was here, and many different partners. Do not hesitate to raise your question now or to contact us later. Also, we are at your disposal, and we can also connect you. We had also the participation of many representatives from the world of the insurance, and from the insurance in Africa in particular, and many different partners who were here also: ILO, KfW, GDP, IFAD, FAO, UNDP, ADA, EIB, NDB. I forgot also some, but do not hesitate to contact us after the meeting. Carolina, would you like to also tell us what's going next and how we can conclude on this interesting topic?
No, I think several points were raised in the presentations about how complex it is to really make this connection between credit providers, mainly from the public development banks and the insurance sector, but also they have shown us that it is possible. It is not simple, but it's possible. So I think the work to be done is to continue working in facilitating that integration and the testing of new models of how to better integrate these two services. One thing that was not discussed, and I think we should always take that in consideration, is that in several cases, at the first insurance connection between an agricultural public development bank and an insurance company is not really to just offer a insurance product to the final user. Sometimes is to get an insurance for the portfolio of the agricultural PDB, or to insure a governmental agency to attend the farmers in case of something goes wrong. And the type of client you work with will feature the type of connection you want to create with the insurance sector. So as we all know, the ideal scenario is that every final user is protected with the right insurance product, but also there are these other models in which the bank portfolio is insured, or the public agency that will support the farmers is insured. So there are several options, and with the view that this is possible and that we are here to learn how to move it ahead in the benefit of the agricultural sector, and especially the small-scale producers of the world.
Thank you, Carolina. So I think we can now close the session. Thank you all for being with us today. As a next step, we will be sharing the recording of the session along with a brief summary note, so you can revisit the key points and share them with your teams. We invite you to stay connected with us through the AgriPDB platform, where we'll be continue to explore and support solutions that build more inclusive, resilient rural finance systems. Thank you once again, and we look forward to seeing you at our next event, and wishing you a great day.